So you've heard about real estate investment trusts, or REITs, and how they're the hot ticket in the investment world, but you're not quite sure what they are or how they work. You're in the right place. Let's dive into the world of REITs and uncover how you can start investing in real estate without buying a single property. Think of REITs as a way to invest in real estate the way you'd invest in stocks. A REIT is a company that owns, operates, or finances income-generating real estate. By buying shares of a REIT, you're essentially investing in a portion of these real estate assets, which can range from apartment buildings and office spaces to shopping malls and hotels. So why invest in REITs? Well, they are required by law to distribute at least 90% of their taxable income to shareholders as dividends. This means if you invest in a REIT, you could get regular income through dividends. Plus, REITs offer a way to diversify your investment portfolio beyond stocks and bonds. There are mainly two types: equity REITs, which own and manage real estate properties, and mortgage REITs, which provide financing for real estate and earn income from the interest on these financial assets. Each type comes with its own set of risks and rewards, so it's important to understand what suits your investment style. So how do you invest in REITs? You can buy shares of publicly traded REITs just like stocks through a brokerage account. There are also public non-listed REITs and private REITs, but these are less common and might be harder to get into for beginners. Like any investment, REITs have their risks. The performance of REITs is closely tied to the real estate market and broader economy, so there can be fluctuations. Also, remember that high dividend yields can be attractive, but they're not guaranteed. It's important to understand the tax implications of REIT investments. The dividends you receive from REITs are taxed differently than regular stock dividends, so you may want to consult with a tax advisor. REITs offer a unique and relatively accessible way to get into real estate investing. They provide potential for regular income through dividends and the opportunity for capital appreciation. As with any investment, do your homework, consider your risk tolerance, and maybe start small. Happy investing! Stay up to date on what's happening in the current real estate market, and for more videos like this one, like and subscribe. Thanks for watching.